Welcome back to another market review. I hope you have all had a good weekend and are feeling refreshed and ready to hit the markets for the coming week. As always, I'm going to start off going over the economic calendar of the news events we can expect for the upcoming week. Similar to last week's, there isn't really any large data releases expected, and the focus is more on speeches. So we had a speech this morning already from the Bank of England Governor Carney, which did seem to give the pound some weakness, as we're seeing pound Aussie down almost 0.5% already today, and pound JPY almost down 0.28% today. And going forward, we have an inflation report hearings on the pound tomorrow, which could move the market. Other than that, we're looking at the Fed Chair, Mon Powell's testimony at 3 p.m. on Tuesday. He then continues this at 3 p.m. Wednesday before we move into some New Zealand and Aussie news over Thursday night before finishing up with GDP of Canadian dollar, which is probably the biggest market moving data release of the week. And then we finish up with the ISM manufacturing PMI from United States. So again, quite a quiet fundamental week it's looking like, which isn't necessarily a bad thing. Sometimes when you don't have much news, yes, the market probably doesn't move as much as it could because you just don't have that volume in the market. But then you also don't have as many sort of fake moves or stop hunts because big banks, hedge funds like to mask their manipulation through economic news releases. So that means trading could become a bit more purer this week, even though trading itself is a very imperfect system. When there is a lack of news, the markets do tend to move accordingly. So what I'm going to do first is go over a few setups that we spoke about last week that actually came to fruition. The main one being GBP JPY. So what we did speak about last week is the potential for this price to actually return back to 145. If we notice here, the price never actually touched this key level. And what we know with these key levels is that the price always likes to complete them, almost be attracted to them like a magnet before reacting or breaking through them. So what we were looking for was a break of this counter trend line here. We had one touch, two touch, and we were waiting for the third touch to happen. What we had on the Monday was the price tried to break it, pull back down to the next key level, and then boom, exploded. What we spoke about on this market review series, as well as the members of the mentorship, were very highlighted to the fact that we were waiting for a 4-hour candle close, back up past the counter trend line before looking to enter on any sort of retracement to this level and trade it up to 145. And that did come through very nicely. We had that 4-hour break, we had that retest, and buys could have been taken for a good 200 pips. So that was a very nice trade that came through for us last week. I hope some of you guys managed to catch it. And also pound Aussie last week. So what we spoke about last week was we were in this structure here. We were in the structure here around the key level. And what we were saying, we were either going to trade from the top of this range, look to try and catch 70 to 80 pips, or we were simply going to wait for the breakout. Neither of those actually happened, but instead what did happen was we broke out to the upside. Again, I covered this in the video saying if we did break out to the upside and it wasn't a fake out, then we could easily trade this pair back up to the upside with 1.8250 and then 1.8500 being upside targets. GBP AUD last week was a classic example of why you always have to stay fluid in this market and never marry one bias. Yes, at the beginning of the week we were looking for the short setup, but that didn't come through. Instead, the buy setup did come through and we reacted accordingly. So again, we had the breakout, retest, continuation. Entries could have been caught around this retest here and also on the spike caused by the Aussie news. As you can see, this spike here probably was to catch people's stop losses, whether they be in break even from the earlier buys or if they were just too tight to this level here. Going forward for this pair this week, if we just focus on this simple structure here where we've had one swing point, 2 swing points, 3 swing points, and we're looking now as if we are falling back towards a fib reversal zone and towards the third touch of the counter trend line. So this will be an excellent place to try and look for buys from. What we would need to do first, however, is to confirm some rejection from this area. So we're looking for some bullish reversal candlesticks. We're looking for some, slowdown in momentum, things like that. And that could really yield an amazing trade at 7.49. Obviously, our first take profit level would be at 1.8250, which still yields a great 2.29 risk to reward. So this is definitely a setup I have my eyes on this week. I do fancy a little bit of pound weakness at the start of the week, a little bit of Aussie strength as well, before we do potentially get those turnarounds. Again, there's always a flip side to every trading idea, and the flip side to this is that we do get a strong 4-hour candle close below the counter trend line, which could trick us into a short on a retest down to 1.800. That would be probably a 100 pip move. It's not my favorite setup, but again, stay fluid in the markets and react to what the markets are telling you. So let's look at some charts for the week ahead. Euro USD is interesting me quite a bit. I would like to see this pair move higher. We have been speaking about this 1.1300 level for a while, and you can see it on the weekly time frame how this level has held very well over multiple attempts, 1 attempt, 2 attempts, 3, 4, 5. The list goes on. We did get a small breakout a couple of weeks ago. However, it's very important to always read the candle. Read the candle and see what it's telling you. This candle tells me that yes, it did close below 1.1300, but with no real volume, no real momentum behind that closure. So that still tells me that the bulls were probably in control over that week. And then since then, we have had the push up higher, with the price coming to an intraday level of 1.13716. So obviously what we're looking at here is the price to first come up to this key level of 1.1450. Longs can be taken, whether we sort of get a pullback from here to look to go higher. Safest bet is to trade on a 4-hour break of this intraday level and moving average for looking to go long there, up to 1.1450 to start off with. Or alternatively, you can be very patient, which I find is sort of the best move on Euro USD. And then we can wait for the breakout of this counter trend line, wait for the pullback, and then we can enter here. So again, 2 potential entries on Euro USD. I do fancy price moving to the upside. It's just whether it's just whether we get in to buys on a break of this structure or break of this structure. I prefer this structure, but we'll have to wait and see how the price action is playing out. Aussie US dollar has started this week very aggressively to the upside. We can see on the higher time frames how 0.70500 has acted as decent support for a while now, ever since middle of September 2018. We have this possibility of a triple bottom forming, meaning that the neckline would be up at 0.7400, which is a price that this pair may get attracted to. If we drop down to a lower time frame, we can see how the price is making these discrete lower highs here. Sorry, higher lows here. Discrete higher lows, which could tell us that a new high is about to be created up above here, which would also encourage us to head up to 0.7400. What you can see is if we fib this move here from the most recent swing point, is that we can see that the price has rejected and reacted out of this fib reversal zone, which is always a good sign. So when price is rejecting out this level here, you can look for those buys up to D1 extension. So I do expect this the price on Aussie US dollar to reach at least 72250 this week, maybe even push higher and catch that D1 extension. We have been successfully trading this pair Aussie US dollar in the mentorship. Our members have been buying, whether it be this swing point here, or whether it be this swing point here last week. We have managed to catch sort of 60 to 80 pips on each trade on Aussie US dollar, which sometimes you just have to be happy with your 60, 80 pips. You're not always going to get those long swing positions that open up sort of 120, 150 pip moves. But just judging how the market conditions are is also a very key aspect of trading, and one I think that a lot of people do forget about, to be honest. So I'm now going to look onto Euro JPY quickly, and quite simply put with Euro JPY, we can see that we are still trading in this range. 126 to the upside and 124 to the downside gives us a 200 pip range that we can potentially trade in. I'm personally aren't a range-bound trader, I like to trade the breakouts, retests, and continuations. However, when the range is big like this, when it is over 200 pips, I will be a little more intrigued to enter a position based off the price action if we were to get breakouts. So what I see here is that we are just ranging in this box here. One thing to remember about consolidation in a box is that fake outs do usually occur. So what I'm looking for is further downside on this pair to come back to 124. Because we're up at 126 here, I would like to see 124 met here before potentially rebounding back up, because we're stuck in that range. So what I'm looking to see is a move from here down to break out consolidation, retest before looking to sell there and trying to catch 130 odd pips to the downside. Again, alternatively, you can be a little bit more cautious and wait for a break of this trend line before entering. But when you are in a range, you do have almost easier trading conditions because you know the resistance, you know the support, and it's a simple case of trading in between the two. So this is the setup I'm looking for that breakout, and US dollar CAD will be the last pair we cover. Again, very nice moves on this pair last week. I don't think I covered it in as much detail on last market review as I have done in the past. But what the members of the mentorship were aware of this week was the fact that we were making these discrete swings here. We had the overall higher time frame rejection out the fib zone. I'll show you that on the daily. This is the fib move that is currently being played out. A, B, C, D, hopefully to form at 1.1300, the D1 extension. You can see that we've had the rejection out the fib zone. So what I told the members last week was to wait for any sort of pullbacks from this level. So what we had done, we had broken support. We had broken the most recent structure. So we knew a retracement was ready. We just had to be patient and wait for the setup to come to us. And this was a great setup provided to our members and mentorship. And for those guys, I hope you managed to catch this trade. It's a nice 130 odd pips, currently still running. And if you are, I would look to secure some profits here, move stop losses to break even at least, and wait to potentially add more positions if we do get that break from 1.3100. I personally will be looking to continue selling this pair this week, and any sort of pullbacks up to the trend line again will be seen as great selling opportunities with a great risk to reward, a high probability trade setup. So hopefully we do get that movement this week, even if it is, first off down to 1.3100, then reverse. Anything up here is going to be sold into, and hopefully we catch those pips. So again, quite a few things on our radar this week. I've covered 6 pairs there. Hope you guys are following along, taking notes. If you want to find out more information about our mentorship service, there is an email in the link below. Just drop us an email and we'll get either someone to call you back or to give you a description of what is included in the mentorship. Obviously, it's going to be a biased statement, but we're seeing some great traders being created in the mentorship. People come to us with a year's experience, but there's still nothing's really clicked for them. Or some people coming to us from complete beginners, and they're finding that the way we're delivering the material, the way we're delivering the content, the fact that we pride ourselves on a lot of personal one-on-ones, that's really helping them evolve their trading and speed up their learning process. So drop us an email if you're interested, and have a great trading week.